We had an interesting day, nonetheless, but not as much range as we had for Globex, which is not a big surprise. We did get a little more than I initially anticipated, which is a good thing. And we got a little more from sell side than we thought, which is a good thing. Or it doesn't matter; it all adds up. So 62 and a quarter was today's number. You can see how important that was as well. Anyway, I don't have anything in particular that I want to relay. I know we've got a few reports coming out later this week. GDP, which will be a little mover, and weekly unemployment claims or jobless claims on Thursday. So those will both be little movers. This, even though we kind of broke down the fact that it held that 5250 area, said it wasn't overly bearish, so we kind of need to see where we are in the morning. Tomorrow, Thursday, will be kind of more important big picture to the market. So tomorrow may be a lesser range day, and then Thursday a good one, and then Friday decent day. So maybe choppy tomorrow, up on Thursday and down on Friday is kind of what I'm anticipating. But obviously, you just need to see where we are at in the morning. Easy for you to say. So Moderator B, I don't know if you've got anything to add, but in the meantime, if anyone has any questions, comments, observations, topics you'd like us to discuss, please get them posted. Give us something to do.
I can talk about a couple things if you want to share my desktop.
Sure. Hold on, let me get you switched over here. There you go. Perfect.
Got it?
Fire away, all yours.
Well, I made a couple notes throughout the day today, just to point out a couple of things for the people in the silver room that have been here a while. Should start seeing some of this, what I'll call more than just basic trades that the posts obviously point out. There is probably midday, there was about 4 different areas that weren't necessarily posts listed for trades, but as a silver room member and somebody that's been here a while, if you're brand new to the silver room, this may not apply to you yet, but it will eventually. But if you've been here a while, you should start to see these things and anticipate some of these more advanced trades. We had a question in the free trial room today. When did we, and the question came about somewhere in midday here when HT was talking about TSP on some of these short scalps. And they said, I kind of followed you in the morning, and we were on buy side, but I don't remember where the heck you went on, where'd you get on sell side? I'm a little bit confused on that. So we kind of walked him through a couple of things, but as a silver room member, you guys should start seeing this and walk through this in your mind. And if you're not able to trade it yet, at least take notes on it and mark your charts or your note areas and watch how the market behaves from that point on. I'm going to switch over. This is today's chart, and these arrows that I've got here are a few areas that I noticed today that you had to be a little bit more advanced to get on the right side or to catch that particular part of the move or whatever. There was a lot of moves that were basic, straightforward trades today. And I'm going to pop this over here, and so I can draw on this. This is just a snapshot of today. This whole area here, I'm going to blow up just so you see. You won't be able to see my time stamp once I do that, but that was probably this first area I'm going to talk about was about 11 o'clock. But from about 11 o'clock Eastern to about 2 o'clock Eastern, bear with me for just a second. The first one here was when we were on buy side this morning, of course, and we had a very aggressive buy up here that you should have gotten out of right away when it wasn't working. That was pretty obvious.
I said north of 72 was super aggressive, bonus money chasing.
Yep.
North of that's probably bonus money. Otherwise, still use the 69, but keep the risks small because we can't rule out more pullback. So it was when we bounced
Yep.
once off of 69, but didn't go very far, and then when we came back again.
Yep.
So,
And you notice once we hit 69 here, this when this bar was forming, that's when HT put the post in that said, make sure you have a short leash because we could have more pullback. So this one pulled all the way back down to here, came back up. You should have been able to get out of that if you got back in a little bit lower. This was another buy level at 68 here. And that one, as you can see, didn't go very far either. So even if you got in this one as well, and you notice that after 2-3 bars it wasn't going anywhere, you should have gotten out of that one at least at break even, if not a small profit on that one. And then you notice this bar pulled back down through that level, went even more of a pullback than the other bar did there, that was at that level, and then pulled back and then bounced back up to this area. And this was kind of an aggressive short for those who could see that this 68 level was not going to hold, and HT had made that post earlier that we could pull back farther. So there was an actual aggressive short from there down to here at least, and he mentioned a TSP there, and then there was a bonus money here. So one of those two places or both, you should have taken some profit.
I think at that point I had said, okay, probably more pullback then to 56, yep. 50, 55, 56 area. Then I later revised it to 55.5, and then said, can't rule out 54, 53.5, yep. Something like that. So by that point, I think we had pretty well,
yep.
thrown in the towel on it going higher from 68 or 69.
Yep, and this was kind of a more advanced trade too, taking along from this bonus money. That didn't go very far either. So if you did take that, you should have taken profit right away. I think HT mentioned a TSP there on the bonus a bounce scalp, I should say. But anyway, so yeah, it pulled back, and he said if 56 at this point, he said if 65.5 holds, will be for more bounce. If not, we're going to have more pullback. And there's my little dotted line there. You can see that. So at that post, that's when I stuck that in there and said, well, if we go up from here, then that's great. If we don't, if we break down below this little area, then we're going to have a level here. And we did take a buy there. That was a legitimate buy, and I think there was a TSP right here. But as you can see, that one didn't go very far either. So then that's when HT mentioned the 63.5, and we had some other buy areas down in here. And of course, this was the next area where some of the more advanced guys in the silver room that have been here a while, we were on buy side still, and you can see it really wasn't going very far. And so at that point, somewhere around 12:20 Eastern time, is when HT started making posts on some aggressive resistance. If not, resistance here, and if not, then take it from there. So that's your three levels, and we were on sell side. So you've got to be able to watch this market. It's not going in the direction we think it's going, so we've got to be able to switch gears and switch to sell side. So this was
Sorry, I said it had to be north of 63.75. Otherwise, use 65.5. Yep. Worst case, 66.75. So you had a couple chances to get those on north of 375. Well, I had three chances actually, but north of 375 or 550 area. And I said repeatedly, south of 62 quarter, maybe bonus money for a while, but we should go test 60, 59.75. And if we lose 59 quarter, okay, then we've got our answer for more for next leg down to 52.50. Sorry.
Yep, exactly. Well, that's exactly was my point. Is he was saying it's got to be above 63.75 here. So you could have taken a short in this area, and when it went down to today's number and down to 61.5 and really didn't go anywhere. I think he mentioned a TSP in that area if you were able to get a short on there. And and it bounced, and if you took profit in this area, if you're on multiple contracts and you took profit in this area, then you moved your stop to break even, so you should have been stopped out on your remaining contracts there. And so then once we were out of this short up in here, or wherever we got out of that one, we knew that the next area to go short was right up here. And you could have, and that's why I put an arrow right here, and a more advanced person knew this was bonus money down here, knew we had a level here, knew we had a good chance of going back up to this level here, could have scalped along up to that level. And that, if you didn't see that, give yourself some time. It'll take some time, but that was an advanced move for sometimes, you can take a scalp trade the opposite direction up to the next level. And you notice we got short back up at this level again. So then, as HT mentioned, then we were still on sell side here, taking this down to breakdown area. And here you can see I've got my dotted line here for my breakdown area. He actually, you guys are not surprised by this, but some of the newer members, he was talking about breakdown area here at 12 Eastern time. And if it takes this level out, we're going to be going farther down to the next significant level, which was 56 quarter. And so I think that's awesome. We took this. If you tried a long scalp there, obviously you got that off for very little loss or break even or small gain because it didn't go anywhere. It broke down through there. But that's always a buy. Sometimes people question that when we talk about, when we get a breakdown area and it goes quite a bit, south of the breakdown area, they go, well, was that a buy there? Well, I think unless HT says something other than that, it's always a buy area because we don't know if it's going to break down or not until it breaks down. So until it gets there, you're ahead of that breakdown area.
Right. Great point. What I like to say is it depends on. There's no always or never. Stay away from those terms, even in your thought process. So it depends on the context of what's been posted on the day. And I said specifically, in keeping with what Moderator B just said, so long as 59 quarter holds, it's just a pullback. Losing that would be a breakdown. So that's what we call leaning on that price. You can lean on it, try it with small risk because you do typically have small risk. It doesn't just break and go. It'll break, it'll come back to and through the break level, typically, give you a chance to get out, give you a chance to get on the other side, and you're off to the races. So in this instance, it was just a pullback until we lost that, and then it changes the complexion of the market. You're spot on. I just wanted to clarify that and tie it to the terminology that we use. When I say lean on that, that's fine, and it means you can use that and keep the risk small. If it's taken out, it's taken out. You get out, and we'll go the other way, and now we have our story. But if it 59 quarter held, we would have been trading at 68, 70 again, something like that. So it is what it is. Go ahead.
So yes, when it comes down to this area, you're long. A couple ticks, tick or two or three in front of that, whatever your tick or two in front of that, you're long, and you've got time. And all of a sudden, when this breaks down here, this broke by 2 ticks, but you can see that next bar made it all the way up to 60 half. So you had room there to get out. And the other question that I always had originally, because I know that the break is not the trade, so we don't go short right here, right? We get with the break is the hint, so it broke right there, and then it bounces to a sell target. And usually he'll give 2 or 3 sell target or sell area levels up here, but the more advanced, and this is one of the other areas that I said some of you more advanced silver members ought to be able to see, is we don't always get up to these areas for ourselves. We don't always have that much of a bounce to get us a better price for a sell. Sometimes it breaks and it bounces a little bit and goes, and today was one of those days.
Exactly. There was no better place to sell than just north of the break area someplace, because it is what it is, and
Right.
I don't run it. There's no cookie cutter. you don't say, I always do this. Well, next time it breaks, it could bounce 5 points, and then you're trying to sell it just above the break price. You're upside down 4 before you know it. That's dumb. But if there isn't one, then that's kind of the scenario. You should never be selling below. There's always going to be some kind of reaction back to, and probably most typically through, that break price to get on board. So you don't have to chase and not miss it, but we didn't get a better / higher bounce place to sell it, and that's just the way it is in this instance, the way it was today. So, but you had plenty of time to get out of the buy, get something on sell side or whatever. But anyway, go ahead, moderator.
Yeah, that was just my point, is the fact that as you become more advanced in the silver room, you will know that we're going to be getting on sell side, and I don't know if we're going to get a high enough bounce to get a sell side from HT, but we always know at the break level, or a little bit better than the break level, is always a very aggressive level to get that trade on. And so we just have to, if we got a trade on here, and that's the other thing, if we got a trade on in here and it didn't go and it was going to bounce higher, we would just take it off and get in where HT said the next level is going to be. So that's where that statement comes. We're traders here. We take what's given to us, what the market tells us, and if it goes, it goes. If it doesn't, it's going to go up to the next level. So those are kind of a few points that I wanted to at least bring up to some of you guys that have been here a while. Now, not all of you, and these were the more advanced, in my opinion, the more advanced trades, but I wanted to speak to the little bit more advanced people here. All of the other boxes I had on there were pretty straightforward trades that pretty much everybody should have read the posts and got, but the ones with the arrows were, in my opinion, maybe a little bit more, you kind of had to have been around a little while and be in sync with the market and the posts and know that a little bit more advanced things. So hope that helps a little bit.
Great, thank you. Anyone have questions for Moderator B or this while he has it up? And I'll read them and he can answer them. 3:30-ish, we said 56 quarter may act as some support for a bounce to 59.75. Otherwise, use 60 half, 63 quarters as aggressive. Worst case, 62 area, and we obviously never got up there again, but it was supposed to go back to 56 at least, 56 quarter. So anyway, it is what it is. Anybody want to have him explain anything else? Anything you've got questions of? He did another video that's on YouTube right now on our YouTube site, Leading Edge Trading, and he's going to be doing another one from a trader's perspective, not from my perspective, from his perspective, called Getting Started, and it's mostly for newer people, but I think you can all probably benefit from that one as well. Just maybe something you missed along the way, or a different way of thinking about it, a different way of documenting it along the way. Because I can tell you what I think you should do. I can tell you what I do. I can show you what I do. It doesn't mean it's going to be 100% in sync. It's sort of like cooking something. We can all eat a grilled salmon. Some people might like a sauce on it. Some people like it with lemon. Some people like it with capers. We're all eating salmon, but it's not exactly the same. It doesn't have to be identical. It has to make sense to you. I'm giving you the information that the market's giving me. So I'm really just the translator. But more importantly, how you document it for you has to be. If you don't like capers, and I'm putting capers out there, you're going to get turned off. You're going to turn your nose up. You say, you know what, I really just like my salmon grilled, just a little bit of salt and pepper. I just, another person say, I don't even like pepper. I just want a little salt on mine. Another person say, just lemons. Another person is going to say lime. Who's wrong? None of them. Who's right? All of them. Not for each other, but for themselves. Okay? And that's the point I'm talking about. I'm giving you the salmon. You provide the lemons and the capers and whatever you want on it. Okay? So getting somebody else's perspective of the best way to take notes or the best way to transpose the notes to your chart or whatever, developing your own shorthand as to what constitutes a break. You can do it with a little @ symbol. You can put the price and put a line under it and then a point up and say that has to hold for a bounce, or this is breakdown, and then make a horizontal line with an angled line down with an arrow down to, and it gives the next target. You've got a whole succinct little shorthand there for this is the price that has to hold, that's the break price, and if it does, we go here, right? And it doesn't take many pen strokes. That's what I want you to achieve, is your own balance of shorthand kind of thing. So that's where I think that can be beneficial, where I'm telling you this is how I prepare my salmon, and the whole time you're saying, yeah, I was with you right up until the capers, or I'm using obviously a kooky hypothetical, but it's that kind of thing. If you get somebody else's perspective that's essentially on the same page but shows you a different spice cabinet, you get where you want to be in keeping with who you are, but you're still using the same base logical information. Okay, I hope that makes sense. Yeah, today was not illogical. It just had moments where it was going faster than others, so the timing was a little bit trickier, but it really wasn't bad. But it's after, think about where we left off on Friday. We were at 50, and we got up to 72 plus, and came back down to 52.75. So it's a fair bit of range. It wasn't bad range, but we still kind of are higher than where we left off on Friday. Great. We had a lot of changes back end to be made to the website for some of the other stuff that we're doing, both in-house and some of the people that are monitoring what we're doing. So there was a lot behind the scenes that you may not have seen. We said there was a lot of stuff that goes way beyond my understanding in terms of web stuff and access from other people for other bits of what we're putting out for information. And in that process, we had that couple-hour interruption of access to the rooms there. So if you were already logged in, you were in. But trying to get in that morning, and it was, I think, the week before last. Also, over the weekend, we had a problem where nobody could access the videos. The videos are on our YouTube channel for now. Some of the ones that we've done and all of the ones that Moderator B has done, and he's going to be doing a couple more. You should just call that one the Fiona video. Doing one, as he just discussed, for the week that he was gone. He was going to do that one then, but he had a 3-day seminar he had to go to. Aside from that, he's going to do that one getting started. We will eventually, once we get caught up on all these other things, have a library segment or area on the website where these are also posted. That's probably a week away, something like that. I don't know. I have to ask admin. She's been hammering away at a bunch of other stuff that we had obligated ourselves to do, but the website took a month and a half longer than it was supposed to. So in any event, that's the way that crap always goes. For now, though, you can see them all, Nancy, on our YouTube channel. I think it's just Leading Edge Trading, or Fiona said sweet. Let's see here. Bruno said, maybe a silly question, but are you drawing boxes during the day or end of day to show us? No, that's a great question.
Great question. I draw the boxes during the day. So, at this time of the day, that much of it is put together. I've drawn this based on the morning post saying we should be on buy side, and then he posts we need to. There's a bonus level there, and whenever you're on buy side or sell side, and he posts a bonus level, if he doesn't post a TSP for conservative traders, there's always a TSP right at bonus level. So I'll draw my TSP right there. And then as time goes on, there's nothing happening, get the opening, And all of a sudden, now we've got a few more posts, so I draw this box, I draw this box. So as the day goes on, I draw the boxes in so that there's no way I could go back, review all the posts, and try to put the boxes in the right place. It'd take me 2 hours to try to do that. So this is actually done minute by minute or 10-minute segment by 10-minute segment that as he posts it, I look and see, okay, yeah, that means there's a buy right there. So I'll put my box there, place my trade, or vice versa, and now I'm in the trade, and I'm, because when you're in the trade, you're sitting there waiting to, watching it, try to figure out, do I need to take it off? Is it going to go down here? What am I going to do? Okay, so you got time to draw your box. You're in the trade, so you draw your box and you make sure your lines are straight, and okay, boom, we're just kind of watching this trade. If it goes, if it goes the opposite way, I'm going to take it off. If not, I'm going to let it sit there until all of a sudden HT makes a post and says 67 for conservative TSP or intermediate or whatever he says at that point. Great, I'm going to take some of it off and let some of it ride for a higher price, and so on and so forth. So I do this as the day goes on while I'm trading, because there's times when you're just sitting here watching the chart, and great, you can kind of make sure your boxes are in the right spot and so on.
The other thing we talked about when he first showed this 2 weeks ago, I think, I said if it were me, I would draw one or more of each of them as a spare and just have them in one corner of the chart so that I could copy and paste them. But then Fitzroy says it takes 1 second to draw a box in
exactly
in NinjaTrader. So whatever works for you. That's the part I'm talking about. I think you should have the levels. I think you should have lines at the levels. If you want to use boxes as sort of an entry target trigger kind of thing, a TSP kind of trigger, there's nothing wrong with that. That's the capers or lemons that I'm talking about. The levels are the salmon. So that's whatever works for you,
It sort of kept me on the right side, and that's how I sort of came up with putting boxes on here, because we were, for example, this morning we were on buy side, and if I was just sitting here watching the lines on the chart, I'm kind of a visual learner, and so I'm kind of strange in that way and kind of weird. So I'd get to this, well, is that line to sell? Am I supposed to be selling to go south, or is it to buy, or to take profit? So I was confusing myself more than anything. And so what I ended up doing was I was on buy side because I had my box here, and until we were doing either a scalp or we were on sell side for the main direction, I wasn't going to have another box until I was either scalping or making another entry for another long trade. These up here were scalp shorts, but we were still on buy side for the morning. And so what that did was it visually kept me engaged in what I should be thinking the line should be doing, or watching how the market responds to these lines versus just having a bunch of lines and then watching the market. And I was like, well, yeah, okay, I don't get what it's supposed to be doing. So the next step for me was to put a little box there saying, okay, well, this was a significant level, so I think we should be buying there. So I put a box there. So, by golly, he said, and then all of a sudden he'd say TSP up here, and I'd be like, I got it right, I knew it. So, these little victories as your training goes on and you start getting in sync with the posts is great. And that's why the boxes came about, was because I had the lines there, but they confused me because I'd get upside down. I didn't know if I should be buying or selling. So it kind of kept me on the right side of things more than the other way around. So if it works for you, great. If it doesn't, then, just use lines or whatever.
Well, that's exactly the point that I'm talking about. Okay, for me, I've been doing this long enough this way that I just need a line, just a graphic reference, and I have the whole scenario mapped out because I wrote it, so I know what I mean, but that doesn't mean you know what I mean. So having the line, good. Having a box like that or some other visual cue for yourself, better. That's called a different perspective. That's exactly why I think this is beneficial, because I can talk till I'm blue in the face, and then you see somebody else's idea who's been around long enough to get what I'm posting, and then said, okay, for me, here's what I need, and it's still in keeping with what we're doing and what we've posted, but it makes it clearer. Perfect. That's why I said it's conceptually, I want you doing the same thing. If you need a line or whatever, or you might have somebody that's colorblind that says, I can't tell the difference between a blue box and a red box. So make one a star, or make one a circle and make one a square, or whatever the case may be. As long as you're doing it where you're supposed to be doing it, that's all I care about, because I don't want anyone getting hurt. I don't want anyone taking any undue risk. But I also don't want you John Wayning it. I don't want you making up your own trades. I don't want you taking too much risk or saying, let's take it on the fly or whatever. It's not necessary. So this, I think, is hugely beneficial. And I can talk till I'm blue in the face about just put a line there. Well, just put a line there isn't enough for me. And you mentioned something about you being visual. Almost all traders are visual. All online traders are visual, because pit traders are dealing with what's going on the other side of the pit, watching what the Goldman trader is doing or whomever. You take that guy and you put him in front of a screen, he'll be useless. And you take an online trader and put him in the pit, he'll be useless. They don't correlate because you're looking at different clues from the market. So practically all traders, except for investors, fundamental traders tend to be more analytical. More accountant types are drawn toward fundamental stuff. More higher learning types are drawn toward fundamentals because they are used to reading massive quantities of books in order to get their PhDs. And that's how they assimilate information. Me, that'd make my head explode. I'm 100% visual person, and that's why this makes sense to me, but I also think in an XY axis basis, and that's why charts make sense to me. But as long as you're doing something that is in keeping with the basic tenet of the information that we're posting, I got no problem with that. So there was a lot there, I think, that is beneficial and yet slightly different, just in terms of how someone displays it, not differently, just a different method of displaying it. Perfect.
And just to follow up on the box that I put on the chart, I put boxes on the chart of where trades should have been, not necessarily every one that I took. Because if I missed the trade, but I know there should have been one there, I know I should have got one, I will still put a box there. If I missed this long because for whatever reason I was in the bathroom or I took my eye off my chart and all of a sudden it's too high to buy, I will still put the box there because I know that was supposed to have been a long, and I know that should, even if I'm not in a trade, I mark the boxes in the TSPs. Just because there's a box there doesn't necessarily mean I took the trade there, but I know that there's probably, in my estimation, there should have been a trade there.
You actually leave your computers to go to the bathroom? What's with that?
I knew I shouldn't have said that.
Who taught you that?
Good point.
Well, I think it's good to help illustrate a way of looking at it, that if you can take something from it and do it on your own screens, perfect. Nisha Kid says, really appreciate this. Moderator B, great way to show how not to be a bump on the wall.
And that's why I pointed out these more advanced things, because as silver traders here, it's not red light, green light, and that's why HT hounds that into us. This is not red light, green light. It is, here's the levels, here's significance, here's the post, here's how I'm reading the market, and we trade it.
Well, let me tell you the problem with red light, green light. And this is a typical problem of retail traders and something that all traders need to work on in order to become pro traders. When people start down this road, they have a I don't want to lose mentality. They're in it obviously to make money, but their focus is I don't want to lose. That I don't want to lose mentality, because of all the crap that they used and followed and studied and used to try to read the market, which was 50-50 at best, probably worse, but they liked it, leads them to viewing putting on any new trade as sticking their hand in a meat grinder. So there's a built-in apprehension to new clicks, to new trades. So what happens is they want to click once, make X, and then be relieved. Whew! I don't want to have to do that shit anymore. So they want to be a trader, but they don't actually want to trade. Sounds a little bit conflicted, but it's true. And that comes from bad information from the get-go, where they don't want the idea of put a trade on, okay, take profit, now put one on this way, why can't I just stay in this one? I'm comfortable in this trade. Boy, if that isn't the antithesis of trading off your P&L or trading off of your position, which is why they lose, and you can't get it. They get that, further hammered in their head when the market spanks them, that they don't want to go into the market multiple times because the risk goes up. Risk has nothing to do with how many times you trade. It has everything to do with how accurate you are, so that you can limit risk by not having to put on any trade in either direction too far away from a meaningful level. So getting that shifting gears thing down, where we're going to go this way, now we're going to go this way, now we're going to go this way, now we're going to do it that way. And every time you do it, you pick up 3 to 5 points. What they have in their mentality is, I want to click once and make 10 points. Impossible. Oh, it's not impossible. You can do it 1 to 3 days a month, tops, where you can just do that. What do you do the other 17, 18 days of the month? 17 to 19 days of the month. You get your backside handed to you because the market doesn't work that way. But I like trading it that way. Well, la-di friggin' da for you. You must like losing. So getting them over that hump is the single hardest thing that we have to do, which is why we put you on a slow and steady path of just watch. Watch and write down everything we say. And then put the lines on your screen. See how the market reacts around those? See how the market behaves pursuant to what we posted? Does that make sense? Are you starting to see it? Yeah. That's where the trust comes in. You have to trust that the market's not going to hang you out to dry. And that even if we get it wrong, we get it wrong for a point and a half. BFD, right? Who cares? You can't be perfect. But we'll get it right back. Give me 20 minutes, 2 hours tops, no matter how bad you got spanked. And we'll have it back, because we didn't forget how, but maybe I missed something. Probably. I'm not perfect. I miss things. Maybe the market threw us a curveball. Maybe there's news out that changed it. So what? But most traders invest way too much emotional capital in this trade. Which trade? The one that they're in right now, and you can't shake them loose of it. They're like a pit bull on a tube sock. I mean, seriously. Whereas a pro trader is, I don't care. I don't care which side we get it from. I don't care if I've got to make 27 trades, and if I can get everything that's there and rack up 20 points or more on the day, beauty. Why? Spends the same. So the retail trader on the one end of the spectrum wants to click once and make X. The exact opposite end of that spectrum is the pro trader. Says, I don't care. I don't care how many times I have to click. Not over trading. I mean, to capture every swing, I just want to get what's there. I don't care about what? Anything. I don't care. I don't care. If you made 18.5 points today, does it have to be from one side? Can it be from both sides? Does it have to be any delineation of buy side or sell side? Of course not. Does it spend any differently? Of course not, especially if you can come in tomorrow and do it again. So that's where we met you, some of you, at that one end of the spectrum. I'm petrified. I want to click once and then, God, I hope I don't have to do that again. To making you pro traders that say, I don't care. It is what it is. Go here. Where? From where to where? Got it. 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 Ding, there's a close. All right, see you tomorrow. Come back and do it again. Perfect. All right, I hope that makes sense. Fitzroy says, I like the idea of drawing the horizontal line to start at the time of the post. Makes it easier to follow. Absolutely. That's why, as moderator B has on his screen, you see where off to the left where it changes from pink to yellow? That's the start of the day when I gave you the 8 o'clock posts. Everything else after that started later. Exactly. And that's how I do mine, and that's how I've been advocating since the beginning of time, and that's how we teach it in the gold and platinum rooms. Whatever is the relevant factor there, that's where it should start. So you know when it became important, when it became applicable, when it became usable. Okay? Maria said, just a clarification on scalps. Following the progression recommended, I have been trading live 3 lots for 10 plus days. If attempting scalps, should they be done with 3 lots too? Here's the thing. Excellent job, Maria. Congratulations. That's awesome. I would say it depends on the time of day, and it depends on the range. What I don't want to see happen ever with any trader ever is changing your focus from points to ticks. So it depends on the context of what's been posted. If we're in a 5-point range day, pretty much all trades are scalps, right? What's a scalp for us? 3 points, maybe less. So a trade for us has to be more, 3 points or more. We typically don't trade anything for 3 points or more. The idea of a scalp is a logical move that you can get something out of, and it's a little bit more advanced, and it's for advanced traders. But it could turn into something else, in which case there'll be another opportunity to hammer it, but you've already made something. Our basic overlying premise is to always be trading into the next target. So whatever that means to you, I wouldn't go crazy on the scalps. If you're just now, live with a 3-lot, 10 days, great. Let's go for 20. Let's not screw it up. When you own it, and own it, I mean in your core, you know what to do, and there's no trepidation on whether or not to put a trade on, just where. And you know you can handle it, and look, if that isn't it, if we don't get followed through from that, I'm okay with taking it off. Perfect. You're there. And there's no limit to the size. You can eventually grow to trade, but you can't let the size dictate the decision-making process. The decision-making process is based on a set of facts, and it's centered around where to trade, not whether to trade. So the size can never dictate put the trade on or don't put the trade on. When there's less surety of the likelihood of the trade, like choppy market or it's an aggressive scalp, it's up to you, then certainly I would do those with less. Now here's the catch phrase, not the catch phrase. You get more options as you trade more size. But in order to trade more size, you need the experience of handling it. So that's what sort of makes it a catchphrase, grow as you go. And let's say you're trading 3 lots now. So is the scalp the same as I think that's a little bit dangerous. I think also that let's say you're trading 15. Now doing a scalp with 3 is like nothing, right? Even doing a scalp with 5 is nothing, but you're going to yield more. So the yields come from size, and the options that you have come from size. So getting good at your job is the first single most important thing any trader can do, knowing they can handle it so that as they add size, it doesn't affect their decision-making process. And as a byproduct, you get more options. It's kind of a long answer, I know, but hopefully that clarifies along with answering your question. Let me know if I did or did not. Maria says that's great. Okay. The reason we go over these, and the reason that oftentimes they overlap, some of the information overlaps, some of the information is repetitive, because we got various traders, we got a bunch of people here at various stages of their learning and various stages of their experience here. I might have said the exact same thing in the first week you were here, but I might as well have been speaking Greek because you weren't ready to absorb that and put it to use at that point in your trading. So going over these, even if it's the same thing, you're always going to get one person at least that we have a light bulb come on for, and it hits home and it drives a point home that they're ready in their trading to accept and use. Okay? Hope that makes sense. Alrighty then, we've got free trial and up chat tomorrow, so if you have any other questions, we'll both be here for that. And sometimes seeing this on a Tuesday makes you hatch an idea or two. Bring it up tomorrow, as long as it's not too advanced. I don't like to make the free trial sessions too advanced because usually we have a few new people in there, and I don't like to get them too far down the road, start talking advanced concepts, and they think that it's okay to do. And as you know, slow and steady is the best way. All right. Have a good night, everybody. I will see you at 8 a.m. You're welcome.